hear me? I hope you can.
Yes, Miss, we can.
Yes.
So topic is business studies, and let's get straight into it. Okay. So, what is a balance? Okay. The topic of today is about balance sheet, and then we're gonna uh, identify what is it exactly and what's the use of a balance sheet. Basically, a balance sheet is uh, a snapshot of what a business owes and what it owes and owes and the amount of investment put into the business by the owners. Okay, so balance sheet is showing what a business owes again, what it
Snapshot
and what
of what
the business owes
business owns.
the company. Okay, you can say it's a snapshot of
The
a
business owns.
statement, right? Particular period.
Mute yourself, guys.
So the
And
document is prepared by the business
amount.
owner. Okay, and it shows again business assets, business liabilities, and business shareholders equity, owner's equity. It shows what a business asset, what a business owns, business liability, what a business owes, now we can say, and what shareholders equity, okay, what the business owners have put into the business itself. Okay? Any questions so far? We'll go through examining what is written down on a budget. Okay, you have three items there, three main groups. We have already covered them. They're assets. Okay, assets. What are assets? Assets are what the business owns and that can be converted into cash. Okay, the other main item with the balance sheet is an asset is one of the main groups of items on the balance sheet. It's further divided into two smaller groups. You have current asset, which is assets that can be converted into cash within a year or less than a year. Okay? And you have long-term assets, which are assets that will take longer than a year to be converted into cash. Okay? So take notes here, and then moving on to the other main group, other main parts of items that are listed on the balance sheet. Liabilities. What are liabilities exactly? They are actually other loans. They can be expenses, loans to be repaid, right? And other forms of debt. Liability, debt. Okay, so liability can be divided into two smaller groups on a balance sheet. We have first current liabilities. Okay, examples of these are liabilities debts that the business must pay within a year or less than a year. Okay, and they are the debts that a business must pay that exceeds a year. Okay, examples are as stated here, deferred income tax, pension fund liabilities, so on and so forth. So, any questions so far? So, the last item on a balance sheet, the group is the equity side. What is being stated there? What are they exactly? These are the money that's generated by the business. Okay. And it also shows the owner's contribution, how much the owner has put into the business. You can remember. And then the equity we should take away can be considered as a net asset. Okay. First, you have on the other groups assets. You remember the equation of that we went through in class? Assets equals what? Liabilities plus equity. Okay, so equity can be seen as a net asset that is left after you have deducted all your debts, all your expenses. Yeah, assets that's left after you've deducted all your debts. Okay, so a business net worth can be taken from the equity portion of the balance sheet. Okay. So, you know the formula, the other formula that we just, the main formula of a balance sheet, assets equals liabilities plus equity. Okay, that formula can be rearranged to make equity the subject here. Shareholders' equity or owner's equity can be equal to what? Total assets minus all the debts of the business. Okay? So trick question. If I were to ask you from the balance sheet, where would you see the net worth of a business? Any ideas? Yes, net worth of a business. It will be seen from the network people from the equity portion.
Equity.
What the business is worth after you minus all the liabilities. Okay? Net worth, net asset, net worth, aka net asset. Okay? Any questions? No?
No.
Okay.
No.
So now a balance sheet must always, oops, a balance sheet must always, a balance sheet must always what? Be balanced. It's already mentioned in its name, yeah? So a balance sheet must always be balanced. It must always, when it is balanced, what happens? It's said to be balanced when now the assets equals the total liability owner's
The liability plus the owner's equity.
yes. So if I were to ask you
Equity.
when can a balance sheet be considered balanced? When the
When the assets
Asset is equal to the
equal
total
to the
liability.
total liabilities plus the owner's equity.
exactly, okay. So it must always, always, and always, and always, and always be balanced. Okay. So if the total of assets is 20,000 kina, what will be the total of liabilities and owner's equity?
20,000 kina.
Well done. Okay. If it's
Always
50,000
be balanced.
kina, what will be the total of total liabilities and equity?
50,000 kina.
50,000 kina.
Okay, just checking. Okay, so once again, so assets must always be equal to total liability plus total owner's equity. Total owner's equity. Okay, any
20,000
questions
kina.
here? No.
50,000 kina.
Oh, geez.
Okay. So, what is the importance of this balance sheet here?
Liquidity, efficiency.
It shows.
To know if you're making a profit or loss.
Who said that? Well done. Okay, you remembered and you took notes. We're paying attention in class. Okay, it shows what again?
How much cash you have readily available.
How much cash you have readily available. Well done. AKA, it's in summed up in one word here.
Liquidity.
Profit.
Okay. So, what is liquidity? Liquidity is, okay, liquidity, how much cash you have readily
available.
available. Well done. So, how do you get the liquidity on the asset, on the balance sheet? You compare what? The current assets to the current liabilities. Which one should be greater than the other? Any ideas? To show a healthy type of business, should the
Asset should be
liabilities be greater or the assets be greater?
Assets.
assets.
Assets. Okay, well done. Which means they are able to pay their debts and have some money remain with them. Yeah? Okay, so
Yes.
well
Yes.
done. So here we have an example of what a balance sheet should look like. Let's go through all its properties one by one. Okay? So, first and foremost, what should we have? A heading. Okay, people, the first part we should take note of is the heading. What is Teddy? What is this here on the board?
Company
Teddy
name.
Fab Inc. What is it?
Company name.
December 31st of December
Company
2000.
name.
Company
The name of
name.
the company.
Okay.
Company.
What sort of financial statement is it?
Balance sheet.
Balance sheet.
Balance sheet.
Sheet.
Company
And what's the accounting period here?
From January.
Which
31st of
which one?
December 2100.
2100.
2000.
Forget the year. Forget the year.
2100.
Within a year.
Well done. Within a year.
2100.
1st of January till to the 31st of December. Well done. Okay. No on. So,
2100.
Teddy is the name of the company. If you're the owner of the business, your name should go first on the heading. Then you have the type of financial statement. In this case, it's a balance sheet. If it's an income statement, what should go there? After your name of the business, income statement, right? If it's a cash flow statement, after the name of your company, you should write cash flow statement. Okay? And then after the type of financial statement, you have the date,
Balance sheet.
the date showing the accounting period. So here on the left-hand side of the
Income
balance sheet,
statement.
you have the assets column, okay? And then on the
Cash flow
assets column,
statement.
okay, it's further divided, as we've already discussed, into current assets. Okay, are we following? Current assets, which can be cash equivalents, accounts receivable, money that you'll receive at a later date. Okay, inventories, stockages, get money from. And then after that, what's the second group that assets are going to be divided into? We had current assets and the other?
Non-current.
Long-term.
Long-term assets.
Right, long-term assets. But in this case, which of this item is the long-term assets now? Any idea?
Property and equipment.
Property, equipment, yes, that's true. Anything else?
Equipment.
Yes, equipment. Anything else? That's true. Anything else?
Land. Land.
What about other assets?
Land.
It's all part of it? Yes, it will be a part of it. Okay? There are only two groups that the assets will be divided into. Current assets and long-term assets. Okay?
Yep.
Whatever that is not a part of the current assets will automatically, obviously, naturally, logically fall under the long-term assets group. Yeah? So,
Term assets.
equipment, right? Well done, kudos to you, as well as other assets. Okay? So, property equipment, other assets, long-term asset group. Okay, now wanting to take
Assets.
note of maybe a small note you want to write
Yes.
somewhere. Okay, total depreciation to date refers to the less, okay, the accumulated amortization, meaning that you've bought some assets in your companies, okay, such as equipment or whatever they may be, and they have worn down over years, so they will wear out in value, right? They're not the same face
Yeah.
value that you've purchased them for. They've worn out and have been used over time, so less accumulated amortization. Patience and time, very expensive word here. So, yeah, that is showing the value that is worth now, the worn down value. Okay, so anything else, something to take note of? Okay, and you see that there are intangible assets mentioned here as well. Tangible assets. This can be securities. You will come across this word securities or bonds. Okay, bonds or IBD, interest bearing deposits. Now these are intangible, meaning you cannot touch, taste, feel. You cannot use those five senses of right. You will purchase them from financial institutions, then they bear interest and they grow in value. Okay, and your money grows, it accumulates, and you earn more money for that. So this is considered what? An intangible asset. Okay, some small facts to take note of. Add into your knowledge bank anyway. And then moving on to the other side of the balance sheet, you have the liabilities and
Liabilities and shareholders' equity.
Okay, we have the liabilities and shareholders' equity. Liabilities are also further divided into two smaller groups. We have current liabilities.
Current liabilities and long-term.
Well done. Okay, what's the difference between the current liability and the long-term liability? Anyone?
Current liabilities are
You can pay off within a year.
within a year or less,
Well,
and long-term liabilities pay over more than
well
a
done.
year.
Okay, so don't forget that. So we have here in the yellow the current liabilities
Liabilities.
and the small one here, the long term. It's not mentioned
Debts,
specifically.
yeah.
So whatever
Term
is
liabilities.
already not part of the current liabilities, you already automatically
Comes under
know
long term.
exactly that it's part of the long term liabilities. Okay?
Term liabilities.
Did we get that? Yes?
Yes.
Okay, well
Yep.
done, people. So now moving on, any other important facts to take into consideration? In the right-hand corner of the balance sheet, after we've come across the liability, the last one will be the equity. Now, okay,
Equity.
equity. What does the equity show? It shows what the company is worth, the net worth of that business. Okay? Yes? So, what is the total assets of this balance sheet here? Are they balanced? This balance sheet balanced?
Yes.
Yes.
Yeah.
What,
Yes.
Yes.
what shows you? What tells you that it's a balanced balance sheet?
The total assets is
Liabilities
The
equal to
plus
the
total
the
total
assets.
assets
liabilities and shareholders' equity.
is the same as the total liabilities and shareholders' equity.
Well done.
What
Okay.
they said.
Okay. Great job, brave people. Brilliant minds here. Okay, any questions? So far, so good? Yeah? Okay. So,
Yes.
question.
Yes.
What is a retained earning? Retained earning? Retained earning? Retained earning is shown in the equity section of the balance sheet. Okay? This is the amount of money that has been
That you kept.
earned in the previous accounting period. Okay? And that money has not been used. That profit that's earned that hasn't been used yet. So they just took the profit, brought it into the balance sheet, and recorded it as retained earnings. Earnings
Balance sheet.
kept back. Okay, retained. Okay, so retained earnings is undistributed profits from previous accounting period. Yes, people? Okay.
Yes.
Yes.
Now you have a question. Yes? Question.
You.
3 questions that we'll try to solve together. Okay. So this is an example of what sort of statement is this? Financial statement is it?
Balance sheet statement.
Balance sheet.
Sheet. Okay. So what is the first question? What's the total of liabilities and equities? What's the total in green there, people? Green question. Anybody can answer this? Do you have your calculators with you?
Yeah. Use your phone.
What is the total of the liabilities and equity here, people? On this balance sheet.
3,437.
I have some answers.
Late louder.
3,437.
Identify yourself.
Derek idiot.
Yes?
Yes, madam.
You remember that equation I told you about?
Bye.
The equation, assets equals to total liabilities and total equity. You remember?
Yes.
Yes.
So, if assets equals to
No.
liability and
Equity.
this is supposed to be plus,
Yes.
yeah?
Oh, wait.
Asset.
So what's the answer?
Total liabilities plus the equity.
According to the numbers
Yes.
of this balance sheet here, the total of all the liabilities should equal balance out with the total of all the liability and the equity. Okay?
Yes.
So we
And
have
the
a total
total
asset given this.
plus the total equity.
I'm telling the truth.
Yeah? Anybody?
But wouldn't it be 6,763 then?
Well done. Well done. Okay. So the answer is
Wow.
wow, exactly. Brilliant mind.
What a wow.
So I have
Yes.
it. Oh no.
Yeah, I'm
Huh?
true.
Is it? Can you see that?
I see.
Oh.
The answer is this. Total
Yep.
assets should equal out, balance out with the total of the liabilities and equities in the green
And
box.
equity.
Okay?
Total
Well done.
liability.
Okay. So what's
And
the
it's, yes.
question? What is the retained profit? What they earned in the previous accounting period? They haven't used, they just put money forward to the current accounting period. Okay. What
I
is
have
the
to just
retained profit? How do we go about
calculate
calculating
all
this? Any ideas?
the total liabilities and equity minus everything else that's calculated over there.
The total
The total what? So we've already discovered that the total here for the total liabilities is
Liability.
exactly.
Same as the assets.
Okay, and in this case, the answer is
947.
Dog is that?
Thank you.
yes.
947.
Yeah, 947.
No, that's the working out, the right working out. Okay.
Mhm. And then the
Ah,
total.
Okay. Can we read that? So
Yep.
yes.
profit will be taken from what? Total liabilities instead,
Is-
which is seen equal to the total assets value already here. Whatever is here will equal out with whatever's there. Okay? So minus all of these items here, the total of all these items except the retained
for
profit.
the retained profit.
Well done. So what is the retained profit value? It is
947.
well done.
947.
So next question, people. Second activity. Total liabilities in this case. Total liabilities.
Can you put this on my bed?
It's not given.
Oh,
No question.
It's not given, yes.
So you have to
It's not
find
given.
it.
Okay.
Put it in my bed. Just go put it in my bed.
Yes.
Yes.
Mute, mute.
So question, what is it?
what is that?
Liability, people.
765.
Well done. 765. Okay. Did you get that? You will say
765.
total liabilities
Yes.
equals to
700.
Oh my God, whose dog is that?
okay.
Shooting.
Opportunities, okay. So we got the total
Someone take
liabilities.
the dog away.
Liabilities combined with equities minus the equity value. Okay, and then we came up with 700 and
Ellie, tell your dog to shut up.
Oh yeah, my dog's inside it.
yes.
Elizabeth.
Elizabeth, mute yourself. You're not barking.
Oh, Elizabeth, control your dog, that.
Question two, blue question. What is the of cash? What's the amount of
$1.
cash available in that company? We already have the total asset value. What should we do? We're trying to find what's the cash.
Add everything else and minus it or something. Yeah.
Well done.
From the total.
Well done. So you do is get the cash
Total assets and subtract
Minus
it by
everything
the
from the
total assets minus the sum of all the
minus sum of all the other assets except the cash.
of them. Okay?
Except cash.
Total assets equals 48,047 minus the total of all the other assets, 6,000.
46,317
Which will give
and
you
the
the value of cash.
1,730.
Oh my God.
I can hear that's calm down, yeah? Okay. So, what is the accounting period of this balance sheet? Any idea where we get this from?
2019.
September 30, 2019.
No. What is
Was it a month?
the counting
Um,
period for the balance sheet presented here? Where do we get this
Was it a month?
information
for
from?
the month of September 1st to the
September
30th of
30th.
September.
So what's the counting period? When does it start and when does it end?
1st of September to the
So
30th
is
of
the
First
September.
of
year, does a year end in
first of
September?
January.
No.
Month.
So
It's
it's
a
a,
month.
Tell
a
you.
month.
It's a month.
Month.
Excellent. So it's a month, right? So what's the beginning of that accounting period?
1st of September.
1st of
I
September.
just said that.
Yet. Okay.
We all did.
Oh my god.
Any questions here so far? No?
No.
Okay.
Let's see.
So you guys were right. So 30th of September. Now we're moving on briefly to our new income financial statement. Okay. Income statement. Yes. What's another name of income statement?
Profit or loss statement.
Profit or loss statement. Okay. What is out of the four types of financial documents or financial statements, which one is the most important? And why?
Balance sheet.
You remember?
Balance sheet.
Balance sheet.
Balance sheet.
Which one is the most important?
Oh, the income statement.
Yes. And why, Valentina? You remember?
Miss,
And because it shows
because
the
it shows
profit of a business that is generating in the business.
Alright.
Okay. So, okay. So, what does an income statement show? It just simply summarizes
Oh.
this transaction for an accounting period. Yeah? Okay.
yes.
Great. Yeah.
Managers and owners, business owners use it to make sound good management decisions. Okay, whether to venture on into in a new business or whether to cut some costs down, right? Or to take more share owners, right? To increase their capital share. Okay. Okay, so what are the items that are listed on the income statement? First, you have sales, whatever that earned during the accounting period. What is COGS? People, do you remember?
Cost of goods.
Cost of goods. Cost of goods sold.
Sold, exactly. Okay, gross profit, okay. Whatever they earned after that minus all the costs of selling those goods, operating expenses accumulated from operating activities, and then you minus all these operating activities, you will get the operating income, what that earned from their.
Profit.
So, free income tax. Income tax
Oh,
is the
I think
name
the
given
dog.
to what? Name given to operating income.
Income.
And then you have
Come on,
other
kill that
expenses
dog.
if there's any, and other forms of income you added upon, and then you have income before tax, and then taxes taken down, and then you have the final.
Net
Net
income.
income.
Well done. So, items on the balance sheet. Sales. What is sales exactly? Sales what's included in
Includes
sales?
all the money earned from your services.
The money that they earn. Okay? Whether it's already received or yet to be received. Okay? Then you have cost of goods sold. What is that exactly? Refers to the.
Cost of goods sold in an accounting period.
Well done. What can be an example? You remember the cost into stock? The cost into stock?
Yes.
Can we say it's related with
Items
direct
purchased.
labor that's associated with the production line? Yeah? Yes, we can. Okay. So do you remember? Oh, before I show
Someone killed that doggy.
Elizabeth.
formula, yes, the dog is dead, but still living. What's
Go to your room.
the formula of COGS, cost of goods sold? Remember?
Beginning of stock.
Yes?
Um,
There are three
the
options.
beginning of stock plus the
Yes, plus what?
end of stock.
Very close,
I
very
don't know.
close.
First
There is
time
a
inventory,
beginning. There is also an end as well.
Inventory.
There is something there.
Inventory.
The ones that have been purchased during the accounting period. So the amount of goods purchased during the accounting period.
Purchase
Okay,
minus the end of stock.
well done. You minus the end of stock to get that. Okay, so formula beginning stock equals COGS equals beginning stock plus purchase stock minus end stock. Okay,
Minus ending stock.
well done. Okay, what's the third one? Gross
Gross
margin.
margin.
Gross margin shows what? Revenue, total revenue generated
Total revenue
from
minus
sales minus,
the cost of goods sold.
well done.